In late 2023, a mysterious online trader stunned the internet. Every week, thousands of people gathered online to watch his predictions. And strangely, they kept coming true. Tech stocks would crash the next day. Crypto would surge hours later. Options trades that seemed ridiculous suddenly turned into massive profits. Some called him a genius. Others called him a fraud. But one thing was undeniable. A 23-year-old British trader named Leo Hart had turned a few £1,000s into millions, while thousands of strangers copied his every move. No hedge fund, no finance degree, no Wall Street connections. Just a laptop, a quiet apartment, and a mind obsessed with one thing: understanding how markets really work. But Leo would eventually discover something that destroys most traders who rise too quickly. Because markets don't punish stupidity. They punish arrogance. And Leo Hart was about to learn that lesson the hard way. Just 3 years earlier, Leo's life looked nothing like success. He lived in a small town outside Manchester. His room was cluttered with half-finished notebooks, empty coffee cups, and a second-hand laptop that struggled to open more than 5 browser tabs. Leo had dropped out of university after only 1 semester. Not because he was lazy, but because he felt something was deeply wrong with the path everyone around him was following. Most of his friends were chasing degrees that led to jobs they didn't even want. Work 40 years. Retire at 60. Hope you save enough. To Leo, it felt like a script someone else had written. So he left. But dropping out didn't make him successful. It made him broke. Leo worked small temporary jobs, warehouse shifts, night delivery driving, anything that paid enough to cover rent. But every night, when the world went quiet, Leo would sit in front of his laptop and open the same website, the stock market. At first, it was just curiosity. Charts moving up and down like a living organism. Billions of dollars changing hands every second. A global battlefield of fear and greed. Leo became fascinated by one question. Not what the market was doing, but why people behaved the way they did inside it. Most beginners try to learn trading by memorizing strategies, indicators, technical patterns, secret formulas. Leo ignored almost all of that. Instead, he studied something different: human psychology. He read everything he could find about investor behavior. Why people panic during crashes. Why greed takes over during rallies. Why crowds almost always move in the wrong direction at the worst possible time. Leo started noticing strange patterns. When everyone online became extremely confident about a stock, it often crashed shortly after. When fear dominated the headlines, prices quietly began rising. The market, Leo realized, was less about numbers and more about emotions. Fear, greed, hope, desperation. The charts were just a reflection of human behavior. And if he could understand that behavior, he might be able to predict the market itself. Leo started small, very small. His entire trading account contained just £2,000. Not money from investors, not money from family, just savings scraped together from months of exhausting late-night delivery shifts. Most nights, while the city slept, Leo was riding through empty streets delivering takeaway orders to strangers who barely looked at him. Each shift paid just enough to survive. But Leo had a rule. Every extra pound went into a single account, his trading account. By the time he finally reached £2,000, it had taken almost a year. And to most people, risking that money in the market would have felt reckless. But Leo didn't see it that way. To him, that money wasn't a gamble. It was tuition. The price of learning a game most people never truly understand. Every evening after work, Leo followed the same ritual. Coffee, laptop open, dozens of market charts covering the screen. But Leo wasn't staring at complicated indicators or secret formulas like most beginner traders. Instead, he watched something else. People, investor forums, social media discussions, trading communities filled with thousands of opinions. Because Leo believed the real market wasn't just numbers moving on a chart. It was human emotion, fear, greed, confidence, panic. And once you understood those emotions, the chart started to make sense. Then one night, Leo noticed something strange. A small technology company had suddenly exploded in popularity online. Its stock was everywhere. Trading forums, YouTube channels, social media. Everyone seemed to be talking about the same thing. This company was the future. Some people were claiming the price would double within months. Others insisted it would become the next giant tech empire. The excitement was overwhelming. Confidence flooded every discussion thread. People posted screenshots of profits. Others bragged about buying more shares. Some were even taking loans to invest. To an outsider, it looked like unstoppable momentum. But Leo had spent months studying something most traders ignore: crowd behavior. And the more confident the crowd became, the more uneasy Leo started to feel. Because history showed a strange pattern. Whenever everyone became certain that a stock could only go up, something unexpected usually happened. Leo opened the chart again. The price had risen almost 200% in just a few weeks. That kind of move didn't happen because of fundamentals. It happened because of emotion, excitement, fear of missing out, greed. And Leo knew something about emotional markets. They rarely stay rational for long. So he did something that felt completely wrong. While thousands of investors were rushing to buy the stock, Leo prepared to bet against it. He opened his trading platform, scrolled through the options contracts, and selected a trade that would only make money if the stock price dropped sharply. His heart was pounding, because this wasn't just another trade. It was almost his entire savings. £2,000, months of night shifts, all placed on a single idea. Leo paused for a moment, staring at the confirmation screen. He knew most traders would call this insane, betting against a stock that everyone loved. But Leo wasn't betting against the company. He was betting against human psychology. And finally, he clicked confirm. The trade was live. Now came the hardest part: waiting. The market closed that evening, and Leo spent the entire night refreshing his screen, reading news, watching investor sentiment. But nothing happened. The price barely moved. For a moment, doubt crept into his mind. Maybe the crowd was right. Maybe he had misunderstood everything. Eventually, exhaustion forced him to sleep. The next morning, Leo woke up before sunrise. His first instinct was to grab his laptop. Markets hadn't opened yet. But then something caught his eye. A breaking news headline. The tech company had just released disappointing earnings guidance. Nothing catastrophic, but enough to shake investor confidence. Leo's heart started racing. The market bell rang, and within seconds, the stock began falling. 5%, 7%, 10%. Selling pressure exploded. Investors who had been celebrating the night before were suddenly panicking. By mid-morning, the stock had dropped nearly 15%, and Leo's options trade, the one that almost everyone would have called foolish, was suddenly worth far more than he expected. He refreshed the screen again, and froze. His £2,000 account had jumped to nearly £7,000. Overnight, Leo leaned back in his chair, not celebrating, not shouting, just staring at the screen in silence. Because something inside his mind had shifted. For the first time, the market didn't feel random anymore. It didn't feel like gambling. It felt like a pattern, a puzzle hidden inside millions of human decisions. And Leo had just solved a small piece of it. That moment changed everything. Because once someone believes they've discovered how the game works, it's almost impossible to stop playing. From that point forward, Leo's life became a routine of obsession. Days blurred into nights. Charts covered his laptop screen. News alerts buzzed constantly. He tracked sentiment across social media, studied institutional investor behavior, watched how markets reacted to fear. Leo wasn't chasing random trades. He was studying crowd psychology in real time, and, slowly, his predictions started becoming eerily accurate. Small trades turned into larger ones. £7,000 became £20,000. £20,000 became £100,000. Eventually, Leo decided to start posting his market predictions online. At first, almost nobody paid attention. Just a few comments. A handful of followers. But then something strange happened. His predictions kept working. A tech rally. A sudden market dip. A surprise rebound in energy stocks. Again and again, Leo seemed to anticipate moves before they happened. His audience began growing. Hundreds of followers became thousands. Thousands became hundreds of thousands. People began calling him the Phantom Trader, because no one knew who he really was. Just a username, and an uncanny ability to read the market. Money started pouring in. Leo upgraded apartments, bought better equipment. His trading account crossed £1 million. But success does something dangerous to the human mind. It slowly convinces you that you're not just good. You're untouchable. At first, Leo remained disciplined, careful, calculated. But over time, something subtle began changing inside him. His followers treated him like a genius, Online forums debated his predictions like they were prophecy. Every successful trade reinforced the same thought in his mind. Maybe he really was smarter than everyone else. Leo began increasing the size of his trades, taking bigger risks, entering positions that were far more aggressive than before. The market, after all, had rewarded him so many times already. Why wouldn't it continue? Then one day, Leo made a massive bet. A single trade. One he was absolutely convinced would work. The logic seemed perfect. Market sentiment, economic signals, investor behavior. Everything pointed toward the same outcome. So Leo committed millions into the position and waited. But markets have a brutal way of reminding people that certainty is an illusion. Unexpected global news broke overnight. The entire market moved in the opposite direction Leo predicted. At first, he assumed it was temporary, a small fluctuation, but the losses kept growing. Hours passed, then days. Within a single week, Leo watched a massive portion of his fortune vanish. Not because he was stupid, but because he had started believing something dangerous, that he could control the market. For weeks, Leo barely traded. He sat in his apartment staring at the same charts he once felt he understood perfectly. The market hadn't changed. Human psychology hadn't changed. But Leo had. Somewhere along the way, success had quietly transformed confidence into arrogance. And markets have a way of destroying arrogance faster than almost anything else. Eventually, Leo returned to trading, but with a completely different mindset. Smaller positions, more patience, less certainty. Because the biggest lesson he learned wasn't about charts or strategies. It was about ego. The market doesn't reward the smartest trader. It rewards the most disciplined one. And every trader eventually learns the same truth. Markets don't punish stupidity. They punish arrogance.